Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
The last topic I want to talk about today is venture capital. I have been writing and blogging a lot about UK local investing, and in particular about the opportunity for UK venture investing as the third largest ecosystem in the world after the US and China, and whether this investing ecosystem will see its potential now that a £1 billion scale-up fund has been announced. And we know that the large body of institutional capital in the UK is at least showing that it is inclined to investing in this. There was a couple of cautionary tales around venture capital this week, and one in particular is the acquisition by Bending Spoons of Airtable. We've seen this described as a kick in the gut for software unicorns and their backers. And beyond the highlights of the fact that it had a $2 billion valuation, it was important to scrape that back and see that there was over $1 billion in cash on the balance sheet. So the actual price paid for the assets there was less than $1 billion. And if we do go through the cap table, what was very interesting to see is that the price was a fraction of its last private valuation. And picking into the data again, we can see that the growth rates had simply not been met. In the case of Airtable, that there was some of the sales reps had failed to meet their target. Only 30% of the sales reps had met their targets, and there was a real sluggishness starting to set in. This company had in fact spun off an agent which had been part of its mesh of businesses previously. Arguably, a lot of the value could actually now attach to an AI agent that was tied to that company's own product mix, and that the actual assets that were left in the company were probably the assets that were not seeing that level of growth. But the message that has been taken from this Airtable acquisition by Bending Spoons, which have a reputation now for turning around companies that are perhaps sluggish, slimming them down, cutting staff, and automating processes and applying AI essentially to really take them to the next level, that may be very successful. But what we can see from Airtable itself is that to achieve this disappointing valuation, their growth clearly was not at the standard that the market is now expecting. One of the messages that came from that is that the 2026 venture landscape is now grow or die. And when we've seen the kind of growth statistics that are coming out of the inference businesses, the AI businesses, this staggering month-on-month growth in revenues. And I will tie this again to the 47% increase in revenues period on period in the S&P. We are now, as a market, starting to expect far higher astronomical revenue growth. Even Palantir, Alex Karp, had described their revenue growth as otherworldly. When we start to see statistics around revenue growth that is otherworldly, so not something that we can identify with and not something that we've seen before, this is when we know that the bar has been raised significantly in order to get to that point that there is a need for much, much higher growth.